Welcome to Java. Thank you kindly for joining me. It's October 13th, 2024. It is also Sunday, so we're taking a look at the week ahead, not just in the markets, but we're also going to go over quite a bit more macro. So I hope you stick with me because quite a few larger picture things that I would like to share with you. The first of which, we are 3 weeks away from the United States elections. And no matter how you feel about it, whether it's like this pumpkin or whether you're ultimately excited about getting out and exercising your right to vote, we're going to be looking at some of the possible repercussions coming forward. So, with this, let's get started with basic markets. Our MMRI risk indicator is holding relatively steady, 262.2. Now, this is very managed. We've got the 10-year yield right now is actually rising. So, a couple of factors going on with this. We've also got the relative strength of the dollar, also in a management phase, if you will. And I'll speak about this in a bit regarding inflation. Now we've got the fear greed meter is strongly in greed territory, borderline extreme. So we've got a lot of retailers piling into the markets right now. And we've got an awful lot of black swans swirling, if you will. Now it's not so much too many people are looking for the exact event that is going to set this off. But I think it's more like a case of the straw that broke the camel's back. Doesn't matter that it's any specific straw, but that the load factor basically that the markets can take right now are at a maximum. And so it will take an event in order to break it. But right now they're propping up this market quite sufficiently, underpinning it between the plunge protection team as well as the Fed flow of money. So, or I should say currency rather. Now, with all of this, we've got Bitcoin and cryptocurrencies on the rise again, above the 62,000 level, very comfortable at the 62.7. So I'll speak a little bit about XRP in a moment. But for this week ahead in general, the United States is basically looking at retail sales, speeches from several Fed Reserve officials, and then looking at industrial production, import export prices, building permits, and housing starts. But before we go into that, we'll go over the calendar in a moment. What the real issue is here is that they are behind closed doors, really more concerned about low inflation rather than inflation, because deflation is much more difficult to control, if you will. So the government's now really, really concerned about deflation, or basically, if it goes deep enough, they call it a depression. So with this, we've got the Eurozone coming out, finally starting to use these words. And we've got a little bit more as well as with the Federal Reserve. Now we've got this other story, troubled retailers facing a Halloween crunch with consumers spending less. Now, as people spend less, businesses close down. As they close down or cut back, that's less jobs and it starts that downward spiral. So, kind of getting closer to that drain, proverbial drain, if you will. So, with this, we've got an example right in front of us, and this is China. So, China leaving more economists wanting more action to defeat deflation, basically to pump more stimulus into the economy. Now, this is their finance head basically saying that China will significantly increase spending to revive their economic growth, talking billions in US dollars that they're still going to pump into their economy. You saw what happened with this. The last time they did this, what happened is that it basically pumped Asian markets that drew some money away from the United States market. And we're watching right now as we speak, Asian markets are looking in the positive. So probably a repeat of this is what we're looking forward to. Now, with all of this, there's of course going to be countermeasure. They're going to pump more easy money in. They're so worried about this deflation that they are going to have to manage this. So when they pump all of this currency into the system. They're purchasing their own debt. This basically is highly inflationary because it's countering too much to the opposite side. So we've got precious metals and oil rising on this, as well as supply concerns. So time to stack if you haven't started already. Get more if you can. So as I was saying, right now we've got very managed markets, at least to the election in the next 3 weeks. But I expect beyond that, because it's political suicide to not keep these markets propped up. So inflation does raise all prices, and we've got an awful lot of black swans swirling, and the environment is ripe. So watching the risk factors. With this is the calendar. As I was speaking about now, Monday is Columbus Day holiday. The bond market is closed, but the stock markets are open, fully functional, so we'll get quite a bit of that. So as we were speaking, manufacturing, import prices, and so forth, home builder confidence through the week, and quite a few Fed presidents that also manage with their speeches. Now, we've got the counter, basically psyops, your mainstream media coming out also to guide the other side, saying the recession fears are fading. And now it's time for America's companies to back that up. We're in a perfect little slow landing, and it's continuing from here. But the numbers don't back up the narrative. They're revising them as much as they can, putting out numbers to support their narrative at the front, and then changing them after. We've known that for some time. And eventually, this is going to crack. So, with this and the current storms that have just crossed over, causing massive amounts and billions of dollars in damage in the southeast, we call them cat bonds for short, but catastrophe bond funds, seeing their risk premiums rising after Milton. This was Milton and Helene, the two hurricanes, but basically the cat bond trade is insurance funds. They're going to have some serious issues, and where they are either pulling out of the states entirely, as they've done in California already. Florida will be next. If they don't pull out entirely, they're going to raise the risk premiums so largely that this will hurt the housing market going forward. So real estate will be probably the larger flag coming forward if something else does not hit first. So with this, few other things that are in the background, and they've got all of this structure towards a new solution that will be ready once this crush comes in. And this is the larger macro that I really want to bring up, because it's very important and not very many people are paying attention, certainly not enough. So let's start with this. They've got building a consumer finance digital ecosystem. So basically, that's a fancy way of saying the CBDC. This one talking about tokenized commodities. Now, I'll have to go into this separately because this is a breakdown exactly of what tokenized commodities are, how they put them through, and how they're traded, also how they increase what they call liquidity, and that just means trading them on the open market. This is also going to expand to people. So we'll do a separate one on this because I can't do it in a short set. Now, with this, just want to put the politics usually I keep aside, but this is a large one in the background as well, especially being that the selections are happening in 3 weeks. Now we've got Ripple co-founder donating $1 million, which really in the long run is not much, in XRP though, to the Harris campaign. Now she's notoriously not crypto friendly. So why would he donate that much to the campaign? Basically because she is the shoe-in to help introduce the CBDC. The other side is kind of pushing Bitcoin a little bit more. So there's a large divergence here to pay attention if you're into cryptocurrencies. Now we know the BRICS nations are looking at expanding their use of national currencies. They're all going to e-currencies. To counter that, the Western side uses SWIFT. I've spoken about this before. Now they're using SWIFT to pilot their digital asset and currency transactions. In other words, CBDCs. Now with this, we've also got the World Economic Forum talking about DeFi regulation. That stands for decentralized finance. Now, this true decentralized finance is going to be very difficult to regulate by the nature of it, but they're speaking about a larger one so they can get it regulated and re-centralized because they want control. They're talking about stablecoin integration with Chainlink, so just want to bring that to you. So with all of this, right now, the only thing that the United States has on the other side is smaller forms of government if you can stay local. Now we've got state regulators, some of them, pushing back on the Treasury call for federal payments rules. Now, the federal payments rules basically is what the CBDC will be running in the background. This is not just the Treasury, but this is also backed by the likes of large corporations, for instance, BlackRock, because that would push their agenda forward and also would be the transfer of literally billions of dollars. That basically is a major money laundering for the United States government. With this, I'd like to speak about a couple of other things that aren't as they seem. Now, we've had Boeing in the news quite a bit, and I've been speaking to the other side. They did have quite a drop in their stock. They are looking at laying off roughly 10% of their workforce. That is, by calculations, over 17,000 employees. 17,000 people that are now going to either be in the unemployed workforce, look for another job, or file for unemployment very soon. They are also setting the example for other companies on the back of this strike that was meant to cripple the company, but it didn't work. And I'd like to go into a little bit of why. This right here, Boeing's 5 kilowatt laser weapon takes down heavy drones in landmark CLWS test. Now, most people don't realize Boeing is first and foremost military and weaponry corporation above just the aircraft. Everyone knows them for the aircraft in the civilian side, but they've got a larger sector. Now, their laser system took down larger Group 3 drones in this US-Saudi exercise, basically. So this compact laser weapon system, which is what CLWS stands for, is using this 5 kilowatt laser to engage and defeat the drones. And drones are the new territory for war. So with this Army's forward air defense system, command and control network using radar cues, and they've gotten into much more than this. But I just want to bring this up because I've had these questions about why the stock doesn't drop, why it doesn't go past a certain point. It's because they are like a bond stock portfolio. They are diversified, probably 60-40% as well. And there is so much more going on in the background than most people are aware of. So with this war going on, now we've got the Ukrainian military draft enforcers now raiding music concerts in Kiev. So this is the draft enforcers. They went in there and dragging off some of these poor people so they can fight in the losing war, basically. So on the flip side to this, the darker side of humanity, we've got lifelike robot invasion. And this is basically a slightly older update of an article back from 2016. They've been creating these, but they are creating this humanoid factory where they are creating realistic humanoids designed for interaction with people and fulfilling quote unquote public service duties. Okay, that's code for sex, basically. So what's going on here is instead of creating fighters to replace people so the people don't have to have bloodshed, we're creating this basic replacement for companionship. So really kind of another war on humanity on multiple levels. And it's frightening on the offset. So with this, there's a lot of good things that come out of this. I mean, I guess it could allay a lot of loneliness. But with this, just want to leave you and hope you have a wonderful rest of your weekend. Until I see you again, my friends, stay free.